This is Patrick Sugup with Sugup Real Estate Services here in Fort Collins, Colorado. And tonight I'm very honored to have a good buddy and a business partner of mine on with me, Samson Jagoras, who is C-suite level at Madwire, owns his own real estate portfolio, active syndicator in real estate, and really just a great person in general, but speaks, mentors, gives back to the community. And I'm excited to hear his story from his perspective, and hopefully you guys take something from it and enjoy. So Samson, appreciate you coming on and spending some time with me, buddy.
Honor is all mine, my dude.
So
Thanks for having me on.
Yeah, I'm interested in hearing your journey. We're young guys, but still have a pretty extensive journey. And well, we're not that young anymore, but would love to hear your journey of how you got to where you are today and how real estate's had a part of that.
Yeah, I've thought a lot about that lately because I've been going on a lot of podcasts and videocasts and interviews, and really have dug in on why do I love real estate so much? I think it's ultimately just something that I do. It's a medium that I love, but why not like technology, or why not, other businesses or something like that? So the answer that I've come to ultimately is, my dad is an incredible craftsman, an incredible carpenter, and I grew up going to a lot of really beautiful, really incredible homes. My dad was the kind of the main dude for the CEO of Robinson's May. For those of you who don't know what that is, be up there with like J.C. Penney. It was massive. And these people were amazing. We were blue collar, low income type of family, and they treated us like normal people, right? And they just had this incredible home. And then we'd go home to the house that wasn't incredible that we rented, right? And I think my dad was like 40 or so before he owned his own home, to which he actually lost in 2008. So real estate is an incredibly important part of, I think, every human's life. It's for me, it's incredibly important for my family, and being able to provide that for somebody else, put a good product on the market, and give somebody a nice, safe, clean place to live is incredible, So I grew up in Los Angeles, California, and was a skater kid, played baseball, played soccer. I love skateboarding, though. I think a lot of just my mentality came from skateboarding. You try to land a trick 100 times, banging your shins up or falling downstairs or whatever. You get pretty relentless in your approach to stuff, and just you learn there's like that consistency is a superpower. When I was about 13, 14, I decided to play football. I didn't even like football growing up, and just fell in love with the game, fell in love with every aspect of it, from the training to the nutrition to, lifting weights and, being a big, strong guy. So I ended up going to school to try to go into something to do with physiology. Started out in sports med, then switched over to human phys. Wanted to go be an orthopedic doctor. Managing football and getting a degree is tough, or getting the grades necessary to go to med school is tough. But I really loved the training side of it. So I was going to go the route of strength and conditioning ultimately. And then graduated on a Friday and walked into a futures and commodities brokerage on a Monday. About 6 months before I was getting ready to graduate, I knew that I was going to propose to my now wife. And just the strength and conditioning graduate assistant route was not something that I ultimately wanted to do. So I started chasing dollar signs. 6 months before I graduated, I didn't even really know what a commodity was. And in the middle of all that, like Bear Stearns was going on. And 3 months into my career as a broker, the Dow Jones fell 777 points in a single day, which set off the economic housing crisis. And I got quickly crowned as an investor, baptized essentially. When you trade highly leveraged futures and commodities, you learn quickly about leverage, and you learn quickly about what makes a good investment, right? So, and I went on to do that for like 4 years, pretty successfully. In the world of commodity trading and even stock trading, people are generally just trading on price, and price in and of itself has no value, right? Because it's not really backed by anything. And there's no greater place to see that than, the speculation that takes place in the futures market. So that's what like propelled me into real estate and just wanting to do it and be great at it. Along the way, when I left the commodities world, I got to Madwire and helped grow that company. So a heavy emphasis of my career has been on just scaling and building teams. And then over the last 10 years, my wife and I have been living and flipping, and we've been acquiring rental properties. And then like 2 years ago, started unloading our portfolio and just really focused on the syndication route, and then finding good people to partner up with to do deals when it makes sense, which is, how we get to know each other. We started our real estate meetup, and I had started it and realized, damn, this is a lot of work. And then we met, and fast forward to today, it's awesome, dude. I'm living out all the work that I've been putting in for the last 2 years. Everything's coming to fruition this year, even during coronavirus. So it's pretty awesome to see. I love real estate so much now too. One of my favorite parts about it is just helping other people get into it, whether that's working with passive investors or, working with our investors to whatever, do a fix and flip or whatever it may be. So,
yeah, no, honestly, it's been a gift to get to know you, because I think one of the things that I've told you is I just didn't have the group of close friends that really were driven and wanted to put in the hours and the work and the time. And then I came across you, and, it was multiple people had suggested. I had got in touch with you, and we met through a good buddy and just saw how hard you work and what type of family man you are, and that you had a passion for real estate investing, and as did I. And, grateful to be able to run that meetup with you. And I think it'll be doing some cool things, and now, doing that project with you here in Fort Collins. So it's been fun to hear your story, see your story, and be a part of it. As far as unloading your portfolio 2 years ago, I was curious. I remember when we first got to know each other, you were selling your townhome. Yeah, maybe not first got to know each other, but within the first few months of getting to know each other, you were selling your townhome. And I was just really curious of like, why isn't he keeping that as a rental? And I know it was kind of things that happened in the economy, but what do you feel like I know you kept your duplex. So what is your kind of theory of acquiring rentals, and what type of assets are you trying to acquire, and why are you trying to acquire them?
The reason that we were unloading those townhomes is they just were poorly positioned. They were just, the HOA fees were continually going up, the taxes were going up, and the margin for profitability just like wasn't there. The duplex that we have, it's just well positioned. It was a change of use from a single family to a duplex, and then we refied it, and then on average, historically, it's cash flowed like $1,000 a month. So we talked about that earlier today. Like I could reduce the rent significantly and still break even, right? Not even pull money out of my own pocket. So, if you can't buy anything off the MLS right now. Well, I'm gonna take that back. It's rare to find something off the MLS that makes sense. We just found a deal that made a ton of sense, right? But you got to find these properties before they go fully marketed. My thesis is, the more doors you can have at a single address, obviously the better the scale you're going to get. And, your number one, aside from the economy, your biggest risk is your vacancy, your tenant base. So just trying to control that and mitigate that as much as possible. And it's becoming, harder and harder to do in some areas, unless you're really digging for it and looking for it. Sure. So I kind of saw every 8 to 10 years, you have some sort of economic correction. Unfortunately, the way that our society or our economy is structured, it's all unpegged currency, paper backed by nothing. And cyclically, it's just kind of how fiat currencies ebb and flow. Mm-hmm. And so I was thinking through that, positioning myself for that, kind of preparing for winter in anticipation of that, and really focused on putting together my syndication team, which is essentially just, for those of you who don't know what that is, it's just private equity for real estate is effectively what it is. We're buying a large commercial complex, and we're putting an LLC around it, and we have limited partners and general partners, which are essentially active investors and passive investors, and we're divvying up equity in that in order to go take down and control and manage this asset.
Nice.
So that's really the direction that I've been going. But I think you got to know what your strategy is, right? So buying like a stable cash producing asset like that in a large metro statistical area where there's, strong net migration and good population, good growth. That's like a core portfolio type of strategy. But there's also like what we do where it's, opportunistic fix and flips. That's different. That's not cash flow type of real estate. That's opportunistic type of real estate. And then there's, Northern Colorado is a growing market. So there's the like winds of change strategy where you're saying, hey, if I can get a good piece of dirt in a market where there's a ton of growth happening, well, that's a good strategy as well, right? So different strategies, and you just got to know what lens to look at what through, So that's how I look at Northern Colorado specifically.
Yeah. How are you going about either, finding those deals, the big apartment complexes, or here in Northern Colorado, what are you what are you leveraging, and as far as your time or network, or how are you trying to find these deals?
Yeah. I mean, the strategy is no different than, what we do. I mean, some of the stuff goes fully marketed, but the majority of the time you're trying to get into the broker's pocket to get it before it's listed, and which is challenging at scale. You're up against like institutional investors. So they have way deeper pockets and write way bigger checks than we do on average. When you have $1 billion to deploy, you're like, man, here's 22 million.
Yeah.
But they're, the same strategy. I mean, there's tons of data out there where you can go and figure out who these owners are, right? So if you can really identify a number of door count, an area where you want to be, why you want to be there, you can basically put bird dogs on these people and have them reach out to these owners, or you could effectively do it yourself. So you're finding those off-market deals. If it's locally, it's the same thing that we're doing. We're talking about mailers and just networking and knowing wholesalers and trying to find deals. Occasionally found on the MLS, like the most recent one we're working on. But I think partnerships are crucial to the deal. We are, right before we started this, which is one of the most beautiful things about real estate in general, is real estate investors actually like working together and helping each other out and helping each other along and partnering up. And I think it's because there's not a lot of proprietary knowledge that like I can't share with you, because in tech there's like a lot of code and I can't share my secret weapon because it's going to revolutionize things. And so real estate's not overly complex. There's some people that are out there innovating it to a certain extent, but that's more like creative deal structuring, not necessarily they're bringing some new innovative housing product to the market that nobody really knows about.
No, I agree with you. And I think too, the one thing I tell a lot of people is that real estate changes every day. And if you find a deal today, I'm like high-fiving you. That's awesome, man. Like do work, get after it. Tomorrow I can find a deal of somebody who had told you a week ago, F off. But there's life circumstances change. The market changes politically, stuff changes, and their goals in sense change. And so I think if you have that mindset that opportunities are everywhere, it's just a matter of, putting the work forth and, being willing and able to pull the trigger and do the deal, and being willing to take the bumps and bruises along the way, but just stay in the game.
Yep. Yeah, I would agree. I think too, what you and I have talked a lot about is there's a generational wealth transfer that's about to occur. Baby boomers are kind of coming to the end of their just tenure of business. And a lot of them own real estate as their business, especially if, they were buying 10 years ago. Right.
Right.
So there's a ton of opportunity where you're just, especially given, how hard it's been for property managers to manage through COVID.
Oh gosh.
A lot of them are probably thinking like, man, do I really want to do this anymore?
Yeah.
And that's not just real estate. That's just, business in general. So,
Sure.
So there's opportunity coming. I don't know if we've quite fully seen the magnitude of this effect. Generally, one of the nice things about the stock market is it's a little more real time. You can feel that pressure and see that liquidity, and a lot of stuff gets priced in a couple days that they're looking out to the future or next quarter.
Yeah.
Real estate, the effects of it are much, much slower because, people, not all jobs disappeared overnight. They kind of slowly unwind, and then those people lose their job. They have some savings. So you can imagine like it delays that timeline before they go. And then you have 110, 125 days to cure a unpaid bill like that, right? So you can go and so there's another, 90, almost, 4 months before that happens. So it could be a whole year before we really feel the full effects of everything that's gone on in the last 6 months, you know?
Sure. And what the government's doing, just pouring money into people's, bank accounts directly, not allowing foreclosures to happen, not allowing evictions to happen. And I'm not saying that that's the wrong thing, but time will tell what happens. But I agree completely that
it's yet to be determined.
Right. And
yeah, capitalism's getting a really bad rap. I think that everybody thinks that if you own real estate, you're just like uber wealthy. Not necessarily. Most of the stuff has debt against it, right? So it's just like any other business where there's, you're paying off your debt, you're paying your bills, and there's some sort of net profit in between there that you're hanging on to as income. But not everybody's just rolling in it unless they've been doing it for 30 years, right? So
I remember the first probably 5 years of investing, maybe four to 5 years of my long-term hold investing. My first deal was in 2009 as a fix and flip, but really got involved with like buying and holding in 2012. But up until 4 to 5 years into my career, I would sit down, even though I'd still do all the credit, background checks, all that kind of stuff, all the tenants that are going to live in my properties. I would sit down with that tenant and I would let them know, like, listen, I'm a local guy who has a family.
Right.
This is not like this is a retirement vehicle for me. And maybe one day I'll hopefully be wealthy enough to retire. But, this is my livelihood. So please take care of it and understand that I'm not this big bad landlord that has all the money in the world and is just looking to squash you. That is not the case. Please call me if you have any maintenance issues. And if you have any problems with the property, let me know. And to see me as, I'm taking a big risk. And that's the thing too, is we're taking big risks, right? That people, and hopefully over time, we can benefit from those risks, in terms of financial gain, being able to retire maybe earlier and things of that nature. But, I hope they see that, we're also not assholes.
Yeah, I think that where it's all going kind of sideways is people are assuming that if you're a business owner or you're a real estate business owner, right? Like the only reason that you're charging more rent is because you're greedy. Mm-hmm. And what they don't actually understand is that no, just everything got more expensive.
Property taxes went up 20%.
Property taxes are up significantly, right? Like the cost of water, the cost of electricity, the cost of maintenance, the cost of labor, all of those things get up. So if you want to be pissed at anybody, be pissed at the federal government who's putting those $600 checks into your account and then telling you that, everything's going to be fine. It's not going to be fine. What's happening is inflation is happening before your eyes. Look back to 1987. The median home price was $87,000. Median home price today is like $260,000. So it's quadrupled nearly, right? Or it's 3 times what it was. In 1987. How's that possible? Inflation. And you're seeing it happen, and it's accelerating now. Like it's already Northern Colorado. The pitch was always like, oh, you can come here, get a ton of bang for your buck. It's cheaper than California, yada, yada, yada. It is not the case anymore. It's on par, right? So as an investor, you got to be more particular about the deals you're looking at and what you're doing and being careful. My fear for most people here in Northern Colorado who are real estate investors is they say stuff like, oh, it's Northern Colorado. It just goes up, and they're like barely cutting by with, $100 margin and not saving for any capital expenditure, operating expenditures or anything like that. And saying, oh, it's Colorado real estate. It goes up forever. And so does California. California is hyperbolic, right? So it doesn't just go up. It goes way up and then it goes way down. So my background in trading always, there's an old saying, and sayings exist for a reason because they're true, right? 2 things. Everybody's a genius in a bull market, and the market always needs another sucker, right? And so, you got to be very judicious in how you're underwriting and what you're looking at and what you're thinking about. For some reason in real estate, there's this misconception that like, I can just buy it and just hold on to it and it's going to do good. Like you wouldn't just go, you know what? I think I'm just going to go throw some money at a McDonald's and I'm just going to see how it goes. I'm just going to hold on to it. You would treat it like a business, right?
Right.
And people don't approach it that way. And so that's where, real estate gets a bad rap of like, oh, do you really want to get the 2 a.m. fixing toilet stuff? It's like, well, that's just bad business practice. Like the reason the toilet probably went out is because you haven't done any, maintenance for the last 5 years.
It's one of those things in real estate, which is happening now. And so if I were to, take my own advice, maybe it would be liquidate everything. But, it's when the attorneys and lawyers are getting involved investing. But now I feel like it's when anybody with a heartbeat is getting involved with real estate investing and thinks it's, a can't lose opportunity, that it's like, ooh, maybe pause a second and just see what's going on. Cause
it's confirmation bias, man. When in 2008, man, I watched people take their accounts from $25,000 to $1 million, and then $1 million back down to 25,000. Like everybody's a genius when the market's going up,
right?
So true investors are always thinking about what's everything that can go wrong, plan for it to go wrong. If I plan for it to go wrong and the deal still makes sense, it's a good deal.
Yeah.
And so back to your question about unloading those properties is just, I didn't feel as good about how those were positioned.
Yeah.
As I do with like the fix and flip we're doing right now, or the one duplex that I have remaining.
Right.
Is it just, what's my oh shit number?
Sure. I think it's smart. And honestly, like taking chips off the table. And if I remember right, you kind of took some off the table to invest in your education and knowledge and team and growth of syndication and focus in, like a spearhead and, go strong after an asset class and opportunity that you truly strongly believe in from now and the future, in a bull market, bear market, whatever market.
Yeah.
So I think there's something to be said about that too.
I spent $50,000 on just team, building the business, making sure I had the right mentor and advisory, and getting all the knowledge and data and information that I needed in order to know in my bones that this is what I needed to do. $50,000, right? Who's willing
to do that? Because most people are going the exact opposite. They're of, how can I get in this the quickest, easiest without any money?
Yep, exactly. And opportunity doesn't flow to a good deal. Ultimately, it flows to knowledge and competency. And so, people are not going to have confidence in you because you have a good deal.
Yeah.
Those are a dime a dozen, right? They're ultimately betting the jockey, not the horse. It's like, dude, this is real estate. Like, you don't necessarily need to convince an investor that it makes sense. You need to convince them that it makes sense to give you the money, and then they're going to get it back.
Yeah.
You know what I mean? And so, if you're going to go be a doctor or a lawyer or an attorney, you spend hundreds of thousands of dollars to do that, right? So, if you want to understand the nuance of syndication, because now it's a whole different league. Now you're regulated by the SEC. You're selling private securities. You're bringing in attorneys and structuring PPMs and dealing with, hundreds of investors, as well as bringing in joint venture partners who, can bring north of, let's call it $10 million to a deal. That's a whole different players league. And you don't wake up and go, I think I'm going to buy a 100-unit apartment complex today. That's just not how that works.
Some people do. Some people are like, oh, I think that sounds like a good idea. And, those are going to be the people that you're buying properties from because they bought them at a poor price point, didn't underwrite the deal well, don't have good management, and then vacancy increases. Their debt service starts to get too high. They didn't structure that well. Their balloon's coming, and you're going to be the knight in shining armor that's going to say, "Hey, yeah, I'm going to buy it, but I'm going to buy it from you at this."
Yep. We're already seeing some of that. An example of a deal that we offered on a couple months ago was 138 units that had 7% management fee on it, which normal is like 3.5%.
Mm-hmm.
So they're paying twice as much on the management. It was a family office. They had one investor in their group who understood real estate, who managed it, who happened to get sick, who was obviously totally distracted from the property, who was getting taken advantage of by the property management team, and then just tons of deferred maintenance, not properly run, charging them fees out the wazoo. Unfortunately, the dude passed away. And so now the group's scrambling and selling it for a $2 million discount.
Yeah.
Right. That's a nasty haircut because you just weren't managing the asset appropriately.
Sure. Yeah. What are your kind of goals as far as, I don't know if it's unit count, door count, what are kind of some of your goals with syndication and, the single family side of things, if you want to go there too?
Yeah. On the syndicated side, my number one goal is to just provide a just a really rock solid, safe and consistent return for our investors. I'm going to put in my own money into it, right? But this is other people's money that you're now becoming a fiduciary and a steward of their capital. And the ultimate goal for all of us, the only reason why you invest is ultimately to create the ultimate asset, which is time, right? So, for every $50,000 that somebody gave you, like how much time did it take for them to get that, right? So that's my most important goal. So incredibly, incredibly stringent and diligent in just how we're underwriting these things. And that's a big testament to the team that we put together. Like my partner is an underwriter, commercial lender for a huge, huge bank, right? They do development and bridge lending debt. So, he kills a lot of stuff because the numbers just don't make sense, right? Perfect. That's exactly what you're supposed to do. You're supposed to be the negative Nancy of the group who tells me that this sucks and here's why it sucks, right? Because how the first 10 deals goes, how the next 10 deals are going to go. You screw up once for an investor, they're never going to come back, right?
Yeah.
So then beyond that, it's just, ultimately getting those assets to perform, because our benefit is on the carried interest, right? If we get the asset to perform, we return equity, then we get to benefit of the upside carry it, anywhere from, let's call it 15 to 30% of the equity growth in that deal, which makes it a win-win-win for everybody. Yeah. From a assets under management standpoint, it's 30 million in assets under management by 2022.
Okay.
Which, that's a big number, but yeah, you're talking about average asset size is like 20 million. You know what I mean? So
right.
It's not that far-fetched.
Sure.
That's 6 properties basically, and it's 3 deals a year for the next 2 years.
Yeah.
Which right now, we've soft circled like $12 million. So, that's enough to take down 2 to 3 a year, right? With debt on that as well. Like more like single family, smaller multifamily, Northern Colorado portfolio. You and I are focused on getting another 15 doors a piece under management, just like really good, rock solid, whether that's, 130-plex or whatever it may be,
Yeah.
And then we, the consistency of just flipping a few properties every quarter, if we can make that happen. And then throwing some mobile homes in there too, and figuring that out. All those things like flips are just the short-term solution to the long-term problem.
Yeah.
But then the big picture for me is, man, I love commercial real estate. I love all facets of it. I really love the development side. And I think there's a ton of opportunity there just to be creative. Like a lot of the creative strategies that we use just with like residential real estate could be applied over to the development side as well too, where you're really de-risking the development process, because you can go the opposite way too and just lever up like crazy. But right. I just know too much about leverage.
Yeah. No, I think that's one thing I'm learning more and more about you, is that your ability to, steer clear of as much risk as possible. Yeah, of course, every deal is going to have inherent risk, and some maybe substantially more than others. But with your background, your knowledge, and experiences, it's how can I kind of hedge, at minimum hedge, but typically decrease as much as possible that risk.
Yeah, I hate risk, right? Like I'm always thinking about how can it go wrong, and one of the biggest ways it can go wrong is to get too levered up on a deal and it's not producing any cash, and then shit hits the fan, and then what do you do?
Yeah.
But like the land deal we've been looking at is, we're trying to get that thing like tied up under a long contract close, right? And tie up the other end of like, okay, after this property gets entitled, that it's already pre-sold. Right. And then we secure water on terms, which people tell you you're crazy. There's no way you'll get water on terms. Watch me. I'll go find somebody who's got a ton of shares and we'll get it on terms. And if you can shore up all those pieces of the puzzle and then get the thing under contract, then it's just about getting it through entitlement. So I just took, $2.9 million of risk down to $200,000 spread across a couple investors. That's how you de-risk that. Now the upside to that is 10x though, right?
Sure.
But nobody's sitting on some huge loan or taking on a bunch of leverage, and those types of strategies exist. That's my favorite part of real estate, is just thinking through how it can be done. I learned early on that like you might call a bank and they'll say, oh, you can't do that type of loan. What that means is that bank can't do that type of loan, right? it doesn't mean that it's not possible. So
Right.
that'd probably be my biggest power tip for anybody who's really interested in becoming a real estate investor is you just got to brush that stuff off and figure out a different way to do it.
Yeah. Yeah. I was just, I was talking with Tim earlier, and, he said that it was his first deal it was his 12th lender that he called that finally told him, or second deal that he did, that it was his 12th lender that he called. How many people would have stopped at, their fifth lender?
Yeah.
Like, 100%. Oh, fuck, like this ain't going to work. I got to stop. I got to cancel the contract. I got to do, whatever. So
yeah, that's exactly right. And that's the difference between the people who make it successfully and those who don't, and those who treat it like a business and those who don't too,
Absolutely. Yeah. I mean, speaking about kind of business, I know you've got Pursuit and working at Madwire and got different things going. But one of your, passions is kind of reading and educating yourself. What books are you reading right now? What kind of podcasts are you what's your most recent podcast that you've pushed play on?
It's interesting. I haven't been listening to a ton of podcasts lately, but I kind of find sources I try not to be too singular and just listen to real estate stuff. Mm-hmm. So I'm listening to everything from marketing podcasts to sales podcasts to wild podcasts. Sometimes Tim Ferriss, for example, he'll go for 2 hours, right? I think I've been listening to a lot of Old Capital lately, which is they're a commercial lender out of Dallas. Work with a lot of multifamily guys, do a ton of multifamily underwriting. So obviously just gleaning a lot of insight about what's happening on the Fannie Freddie debt side. In terms of books that I'm reading right now, I've been reading a lot of Oren Klaff stuff. Oren Klaff is a professional capital raiser. I mumbled that, professional capital raiser. And he wrote a book called Pitch Anything, and he wrote another book called Flip the Script. And a lot of it's just in and around just understanding how to better communicate your offering to an audience to just make sure that it gets consumed. He just talks a lot about the structure of biology of the brain and how people have an innate reflex.
Croc brain, right?
Croc brain. Yeah. Do I run from it? Do I fight with it? Do I have sex with it? That's the three things. And so you got to kind of get through that part of the brain so that, people will actually hear what you have to say. So
yeah,
I've spent the majority of my career in just selling intangible products, right? Selling commodities and trading accounts to people, get them to open a brokerage account, to selling marketing, right? To raising capital. You're really trying to communicate the value of what the offering is and connect the dots between, hey, here's what you want, and this is what you say your challenges are, and this is the way that we can help you. I think the biggest takeaway there is just communicating with investors that, not being needy. There's a ton of money out there, right? And so ultimately I'm trying to determine if you're a good fit for us and the group, just as much as you're trying to determine if we're a good fit for you. And when you get that to that point, it's kind of like a superpower, it's man, on to the next one, right? When you have that mentality about it, surprisingly, people want to work with you more. It's all like dating. The harder you try, the more she's like, get away from me,
Yeah. Shit, man. I never had that experience.
You're lying. You're lying.
No, never. Dude, I appreciate you. Honestly, spending time with you has been, a blessing, and
same, man.
Getting to know you and your story and your drive, honestly, it pushes me. I'll see a post and I'm like, oh man, he's out there getting after it, and I'm, watching it home. Yeah. So it pushes me, which I think we all need. I actually was, what was it, Simon Sinek that was talking about, we need a worthy rival. Not that you're a worthy rival by any means, but you push me. And I think
we all need that.
We all need that to keep each other accountable, which I love, as far as partnerships. Same. And really to be able to enjoy the ride too. Because honestly, I look forward to, when we're 40, 45 years old and we've got kids grown and doing family vacations to, some type of beach that we're able to enjoy together.
Same.
I'm looking forward to that kind of stuff.
Yeah, at the end of the day, man, you're making memories, and I was actually on a podcast earlier today. I was talking a lot about just what he said was when you turn about 38, your life kind of seems to slow down because you have a lot less experiences. You're just not learning and doing and having a lot of new things. And he says, do you think a lot about that? And I said, actually, no, not really. I think more about, when I'm on my deathbed, Like, am I going to be pissed that I didn't do that? You know, that thing that I wanted to do, that I didn't leave the mark that I was supposed to be, what I'm here to do, you know? And I think that comes about just like going all in on the stuff that you want to do most, you know? And we get caught up worrying about security and finance and blah, 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 blah. And, you know, at the end of the day, I just want to do cool stuff with cool people. And I can't take any of this other stuff with me, you know? So I can take the memories, and I can take, you know, how many people are going to show up to my funeral? Like, what kind of impact did I make? You know, I think that's a way more empowering way to look at it. But, you know, I see myself, I'll be doing deals till I can't do deals anymore.
Oh, yeah, absolutely. I was just talking, and I don't think I'll ever retire. I just want to be doing deals on my terms and not have to worry about writing a mortgage check, you know, just because it's fun as hell and I enjoy doing it.
Yeah, we're chasing financial security, and we have financial. What do you do with that? You just get more time. When you have more time, what do you do with that, right? You serve others, right? You give back. You engage in your community. You go to your kids' games or whatever, visit them at college or whatever it may be. And that's ultimately what we're after. And that's a lot of what real estate can give you.
Yeah, absolutely. Well, Samson, I appreciate you, man.
You too, bro.
Thanks for hopping on.
Yeah,
and appreciate you watching. So hopefully you guys took as much from Samson as I did. So reach out, Samson. All of his contact information is going to be down below. And thanks for watching.